The housing market may be cooling off, but many homeowners are looking to get a better deal on their monthly payments.
A better deal, it sounds like a lot, but applications for refinancing a home loan, they are up 6% last week, according to the Mortgage Bankers Association. Mortgage rates have fallen to their lowest levels since September, although they are still more than double what we saw around this time last year. We want to bring in now Mike Fratantoni, a chief economist at the Mortgage Bankers Association. Good to have you with us. So I think a lot of people are struggling with their finances right now, and they feel uncertain. Answer this question. Is it a good time to consider refinancing, or should you just pause right now?
Well, Jim and Lana, thanks for having me on. I think, as you pointed out, we are in a very different situation than we were last year at this time. Beginning of 2022, mortgage rates for a 30-year loan were at about 3%. Now we're at 6.3%, but we've been above 7% until about a month ago. So wide range. What happened in 2020 and 2021 is that millions of homeowners were able to really realize substantial saving by refinancing when rates were at or near record lows. At this point, more than 90% of homeowners with a mortgage probably have a rate of 4% or below. So 6.3 is not going to be attractive for a lot of folks that refinanced over the last couple of years. But for someone that might have bought a home earlier this year, it could be a good opportunity.
So many metrics to use to assess sort of where we're at in the housing market. Existing home sales were down 7.7% in November. That's a 10th straight monthly decline. So what needs to happen for the housing market to pick up steam again?
Yeah. So I'll start with really the most important number we have, which is if you look at the demographics of this country, we have 50 million people between the ages of 28 and 38. That is really sort of the heart of the peak age for first-time home buyers. And I expect over the next couple of years, more and more of the market will be taken up by those first-time buyers looking for a place to call their own. The challenge is we've got a weaker economy now. We're forecasting a recession for the first half of next year. Unemployment rates likely to rise. Wage gains are likely to slow. And then this year, we've really been struggling with this spike in mortgage rates. Beyond that, the last couple of years, there just have not been a lot of homes on the market. I would point to another number from that existing home sales report this morning. There's only about 3.3 months of supply. So it still is going to be a challenge. Properties are staying on the market a little bit longer. I think someone looking to buy this coming spring, they're going to have a little easier time finding a property than someone looking a year ago. But it's still a relatively tight supply in the existing market. We are seeing a bit more supply on the new home portion of the market. Builders, it takes time from the decision to break ground to when those properties are ready for sale. There are a good number of properties that are currently under construction.
Well, let's talk about builders, because the CEO of the National Association of Home Builders said in a recent interview that we are in a housing recession right now. Obviously, part of this is by design. The Fed is trying to cool down the market, especially the housing market. Do you think that we're in a housing recession? And do you see this overall as where we should be as a nation?
Yeah. So housing is probably the most interest rate sensitive sector portion of the economy. And when you look over the past several decades, the typical pattern has been the housing sector leads the U.S. into a recession and it pulls it out. So that's our expectation as well, that absolutely the housing market has slowed sharply over the past 5 or 6 months. We think, again, potentially if rates continue to drop, we'll get a little bit of a fuel to help the housing market pull the economy out of the recession we're forecasting as we get into the second half of 2023.
All right, Mike Fratantoni, thank you so much.